Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Peabody Energy stock so we can determine if it's a buy or a sell. Peabody Energy is a coal mining company headquartered in St. Louis, Missouri. Its main business consists of mining, selling, and distributing coal. And as you probably already know, coal is used for electricity generation and steel making. The company also markets, brokers, and trades coal through offices in China, Australia, and the US. In 2022, Peabody recorded sales of 124 million tons of coal. That is a lot of coal. It also markets coal to electricity generating and industrial customers in more than 26 nations. They have about 2.4 billion tons of proven and probable coal reserves. Peabody maintains ownership of majority interest in 17 surface and underground mining operations throughout the United States and Australia. In the United States, company-owned mines are located in Alabama, Colorado, Illinois, Indiana, New Mexico, and Wyoming. Their largest operation is the North Antelope Rochelle mine, located in Wyoming, which mined more than 60 million tons of coal in 2022. If you have family from Wyoming back in the early 1900s, I'm sure your family or their friends were coal miners. They spun off their operations in West Virginia and Kentucky into a separate company called Patriot Coal Corp. in October 2007. In October 2011, Peabody acquired a majority ownership in Queensland-based MacArthur Coal, which specializes in the production of metallurgical coal, primarily seaborne pulverized injection coal. The company was struggling for quite some time and filed bankruptcy protection in April 2016. They emerged from bankruptcy in April 2017 and started trading on the New York Stock Exchange with the ticker BTU. Sometimes when a company goes through the bankruptcy process, they want to change a lot of things as if they're a new company. They changed their logo. It was Peabody Energy. Now it's just Peabody. They were founded way back in 1883, and they were known as Peabody, Daniels and Company. In the beginning, the company bought coal from established mines and sold it to homes and businesses in the Chicago area. And they grew a lot the next couple of decades. After World War I, they went public for the first time in 1929 with a listing on the Midwest Stock Exchange. And then in 1949, they were listed on the New York Stock Exchange, which was the biggest at the time, and it still is the biggest exchange in the world currently. They were ranked 8th in the mid-1950s among the country's top coal producers. Even though they were a big company at the time, they were losing market share because there were smaller companies that were doing things really cost-effective. To try to address the issue and increase their market share, they merged with Sinclair Coal Company. And that merger happened in 1955. And then in 1962, they expanded operations into Australia. Then they forged an equity partnership with Japanese trading company Mitsui & Co. In 1968, they purchased Kennecott Copper Corp. The U.S. Federal Trade Commission challenged the purchase as an antitrust violation. So in 1976, the FTC ordered Kennecott to divest itself of Peabody. The newly created Peabody Holding Company purchased the Peabody coal business of Kennecott for $1.1 billion. In the 1980s, Peabody expanded its operations in the eastern part of the United States, acquiring West Virginia coal mines of Armco Inc. in 1984. They also expanded westward, opening the North Antelope and Rochelle mines in Wyoming in 1983 and 1984. Let's get started with the model. This is a mid-cap company, 3.1 billion market cap. They're trading at $21 a share, and they have 144 million shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Revenue was low in 2020 due to COVID, so they had negative free cash flow. It improved a lot in 2021 to 237 million, then jumped way up to close to 1 billion, and it's even higher in the trailing 12 months at 1.6 billion. Net income is the profit or loss on the income statement. It's revenue minus expenses. Big negative in 2020, small positive in 2021, jumping way up to 1.3 billion in 2022, even higher in the trailing 12 months. Revenue is a sales for the company, and that looks amazing, from 3 billion, almost exactly doubling to 5.7 billion. So their financials look great. Let's take a look at their 10Q from 3/31. This is their most recent 10Q. And it starts off with their income statement. Revenue in the first quarter of 1.36 billion, about double last year's of 690 million. Let's get a breakdown of the 1.36 billion so we know what it is. Of the 1.36 billion, 900 million is thermal coal, 287 million metallurgical, and 178 million of other. Here's a breakdown of the thermal coal. 590 million domestic in the US, 300 million exported to other countries. For metallurgical coal, it's all exported, the entire 287 million. Metallurgical coal is also known as coking coal. It's used to produce coke, the primary source of carbon used in steelmaking. Metallurgical coal differs from thermal coal, which is used for energy and heating. Thermal coal is also known as steaming coal, or just coal. Thermal coal is used to generate a lot of the world's electricity. However, its high carbon and sulfur content means it's also a major contributor to greenhouse gas emissions and global warming. The other of 178 million is footnoted. Let's see what the footnote says. This includes revenue from customer contract payments associated with volume shortfalls, royalties related to coal lease agreements, sales agency commissions, farm income, property and facility rentals, and revenue related to the company's assignment of rights to its excess port and rail capacity. Of the 1.4 billion of revenue, 350 million is seaborne thermal mining. Seaborne thermal mining is just regular coal shipped by vessel. Then you have seaborne metallurgical mining, 288 million. That's just metallurgical coal shipped by vessel. 300 million in Powder River Basin mining. This just refers to their mine in Wyoming, the Powder River Basin mine. Other US locations, 248 million. So when you compare this quarter to last quarter, they've improved in every category except seaborne metallurgical mining. That's down 10%. They mention it here. The decrease is due to unfavorable realized prices, partially offset by favorable volumes. Their operating expenses are 847 million, depreciation of 76 million, asset retirement obligations 15 million, SG&A 23 million. Their operating profit is 400 million, compared to a loss of 71 million from last year. Big improvement. They paid 18 million of interest on their debt, a lot lower than last year. Income before taxes 400 million, taxes of 118 million, net income of 284 million. That gives them an EPS of $1.87 compared to a loss of 87 cents last year. They did add shares. They had 136 million shares last year, now it's 145 million. They also issued a convertible note. If the owner of the note decides to convert the debt to equity, that will add another 16 million shares. So if the stock price goes up a lot, then they will convert that debt to equity. If the stock price remains fairly steady or even declines, then they will not convert the debt to equity. Let's look at their balance sheet. They have current assets of 1.9 billion, current liabilities of 900 million. So they can cover their current liabilities with their current assets 2 times. Current ratio of 2, which is a really good current ratio. 395 million of cash on their balance sheet, 330 million of inventory, and 260 million of other. That's how you get the 1.9 billion. They have a lot of PP&E, 2.8 billion. Here's a breakdown of the PP&E, 2.5 billion of land, 600 million of buildings, and 1.6 billion of machinery. They depreciated 1.9 billion. So that's how we get the 2.8 billion. They have 900 million of restricted cash. Here's a breakdown of the restricted cash. 566 million in surety trust accounts, and then another 248 million of collateral for credit funding, so a total of 814 million. 78 million of deposits with regulatory authorities, 29 million for a letter of credit facility, and 15 million of deposits held on behalf of surety. A surety is a company like a bank, and they're responsible for paying BTU's debt if BTU defaults or is unable to make payments. Of course, BTU has to pay that surety a fee and give them collateral. $86 million of investments and $29 million deferred income taxes. So total assets $5.8 billion. Total liabilities $2.3 billion. $850 million of accounts payable. $322 million of long-term debt. Most of that long-term debt is the $320 million 2028 convertible note. That pays an interest of 3.25%. They issued this $320 million note in order to get money so they can redeem $63 million of senior secured notes maturing next year and $257 million of notes maturing in 2025. This convertible note will mature on March 1st, 2028, unless of course it's converted to equity. They have $668 million of asset retirement obligations. It is common for mining companies and oil and gas companies to spend a lot of money to retire an asset. Here's a good example. Imagine an oil drilling company has a 40-year lease on a parcel of land. 5 years into the lease, the company finishes constructing a drilling rig. Let's fast forward 35 years. Now their 40-year lease is complete, but there's a lot of remediation. They must remove the oil rig from the ground and clean up the area, which can be really expensive and really time-consuming. So that's why companies have to carry this debt on the balance sheet in preparation for cleaning up the land. So total liabilities $2.3 billion. Let's look at their equity section. They raised $4 billion from selling their business. They bought back $1.4 billion of stock. They profited $650 million from running their business. And they have an unrealized gain of $228 million. So total equity of $3.5 billion. Let's look at the statement of cash flows. The first section is operating cash flow. That's how much cash the company generates or loses from running its operational business. So even though they reported an accounting profit of $280 million, when I say accounting profit, I mean their net income, they actually generated $389 million of cash flow because there's a lot of non-cash items on the income statement, like depreciation and amortization. They had a cash outflow of $59 million in their investing section. Most of that was the addition of property, plant, and equipment. And they had a cash outflow of $39 million in their financing section. It looks like they bought back $13 million of stock. Last year, they issued $222 million of common stock. So that's why they had a big cash inflow of $132 million last year. Let's take a look at their first quarter earnings release. Here are some of the highlights. They authorized $1 billion of share repurchases, adjusted EBITDA of $391 million, operating cash flow of $386 million. They exceeded their seaborne thermal export volumes by 17%, shipping 2.1 million tons. Let's look at seaborne thermal. They sold 3.6 million tons in the first quarter, 1.5 million domestic, 2.1 million international. Revenue per ton is $97. That's up a ton, no pun intended, from last year. It's up about 50%. Last year it was only $67 a ton. The revenue per ton domestic is $25, international $148. Cost per ton is $51, so the EBITDA is $46, giving them a total of $164 million, which is down from last quarter of $209 million. For metallurgical, 1.3 million tons, which is down a lot from last quarter, up a little from last year. Revenue per ton is $221, which is down a lot from last year. The cost is $151. So their adjusted EBITDA in metallurgical is only $91 million, half of last year. In the Powder River Basin, they sold 22 million tons, revenue per ton 14, and cost per ton 1226. So their EBITDA was $36 million, up a lot from last year of $8 million. For the second quarter outlook for seaborne thermal, volumes expected to be 4 million tons, including 2.6 million export, 1 million export tons priced at $243 per ton, and 1.2 million tons of high ash product. And they mentioned 400,000 tons of Newcastle product are unpriced. For seaborne metallurgical, the second quarter volumes are expected to be 1.7 million tons, 500,000 tons priced at $244 per ton, and the remaining volume unpriced. Powder River Basin, 21 million tons at an average price of $13.70 and a cost of $12. Other U.S. thermal volume, 4.3 million tons at an average price of $53 and a cost of $41. Let's go back to my Excel file. This is their capital structure. $3.5 billion of equity, $340 million of debt. They're 91% equity, 9% debt. And they could pay off all the debt with the cash on their balance sheet and still have $550 million of cash left over. I gave them a whack of 9%, and that's a discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's $6 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $6.3 billion. We divide that by 144 million shares. And we get a calculated stock price of $44. They're trading at $21, so they're trading at a 51% discount. It's a strong buy according to the model. There are 6 total companies in the thermal coal industry, and if BTU has a number in red, they're worse than the median. If they have a number in blue, they're better. They spend more than the average in CapEx, $248 million. They have a really good debt to equity ratio, the best on the list. They pay a small dividend. Alliance Resource and Natural Resource pay a double-digit dividend. They generate the most free cash flow of all the 6 companies. They are the largest on the list, 3.1 billion market cap. The average is 1.5 billion. They have really good price multiples, a price to free cash flow of 2.0. It's almost like they're giving money away. They generate lots of revenue, more than double anybody on this list. But the reason the stock price is coming down is because they're not growing anymore. Their 5-year annual revenue growth rate is negative. All the other companies are growing. Most of them have double-digit growth. Let's take a look at the stock on Simply Wall Street. They last traded at $21, 3.1 billion market cap, up 7% in the past week, down 4% in the past year. Peabody does coal mining in the US, Japan, Taiwan, Australia, India, Brazil, Belgium, Chile, France, Indonesia, China, Vietnam, South Korea, and internationally. Here are some recent news and updates. We think Peabody might have the DNA of a multi-bagger. Upcoming dividend of 7.5 cents per share, a 1.3% yield. Price target decreased by 10% to $29.75. Look how low that PE ratio is, 1.8. The industry average is 5. A bunch of companies above 30. There are some companies even lower. Southwestern Energy 0.9. Callan Petroleum 1.5, Gulfport Energy 1.5, and Vital Energy 1. But look at their estimated growth. Big negatives. I think these 4 companies are in trouble. Simply Wall Street values the company at $13. They're saying it's 67% overvalued. 5 analysts priced this stock and the average price target is 28. They say the stock is 32% undervalued. Their current 12-month revenue is $5.7 billion. Forecast at the end of the year is $5 billion. By 2024, $4.3 billion, and by 2025, $4.1 billion. Here's that trailing 12-month revenue since 2012. It was $8.2 billion in 2012, and it's pretty much only gone down since then. Its lowest point was $2.7 billion in the first quarter of 2021. It has been coming up a lot the past few quarters. It's more than doubled since the bottom. They are decreasing their debt. It was $6.4 billion in 2012. It got up to $8.5 billion in 2016, but then by the first quarter of 2017, they got it to below $1 billion. Their dividend yield in 2018 was 1.2%. By 2019, it got to 3.5%. They did cut their dividend in 2020, 2021, and 2022. They brought it back in 2023. And look at this, the forecast is for the yield to be over 7% by 2025. Do you think it's going to hit that point? The CEO's salary is $1 million. Total compensation package, $3.8 million. In the past 12 months, there's been only insider selling, no buying, mostly by Elliott Management Corp. Big sells, 1.7 million, 1.7 million, 1.1 million. So almost 5 million shares have been sold in the past year. 67% of the companies held by institutions, 18% by the general public, and 15% by hedge funds. Elliott Management is the biggest shareholder at close to 15%. Elliott Management has been around since 1977. They have $71 billion of assets under management, so they're a pretty big fund. Next biggest is Vanguard, then BlackRock, then a bunch of other companies. They did have over 8,000 employees in 2012. It has come down to 5,500 currently. The ticker trades on the Santiago Stock Exchange, New York Stock Exchange, and Deutsche Börse. Let's look at this stock on Yahoo Finance, trading at $21.29, 3.1 billion market cap. The 1-year price target is $28. They started trading again in 2017, and they started trading in the low 20s, which is where they are right now. After about a year, it jumped up to over 25, and then by the end of 2020, it got down to about $1. Imagine picking it up for $1. That would be an amazing return. It has come up quite a bit since the bottom, trading between $20 and $30 the past year. Last year, their market cap was $3.5 billion. Then it fell a lot the following quarter to $3.1 billion. And that's where it is right now at $3.1 billion. So it has decreased a lot in the past quarter. It was up to $3.7 billion at the end of March. They have a beta of 1, so the stock moves with the market. It's up 1.5% in the past 52 weeks, while the S&P 500 is up 15%. The 52-week low is 17, the 52-week high is 33, and the stock is on a downtrend, trading below its 50-day and 200-day moving average. And it has a pretty high short percentage, 15% of the shares on float or shorted. Let me know what you think of the video. Like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.